Awesome. Well, thank you all for taking the time. Excited to kick off our first panel. I just did a quick intro, but I'll do a little bit of TLDR. So Evan from Alluvial, been working in the staking space about 6 years, formerly founded a trade association called the Proof of Stake Alliance, and then ran a bunch of the different biz teams at Bison Trails prior to getting acquired by Coinbase. I'll kick it over to Gaetan.
Hey, hi everybody, Gaetan. Head of protocol Blockdaemon, we're an institutional grade provider running validators for the liquid collected folks. Super happy to be here. Thank you so much for the invite and being part of this great, talented panel.
Hey everyone, Ben Spiegelman. I lead partnerships with Figment. We are the leading infrastructure provider for proof of stake networks. We were a co-founder on Alluvial, and we're really excited to be here with friends and colleagues and new friends.
Zane, Glauber, head of strategic opportunities at Galaxy Digital. Some of you may know Galaxy. We're a publicly traded institutional-only, technically a merchant bank, but we have global markets, we have asset management, we also have digital infrastructure solutions, and my team is responsible for the provision and delivery of blockchain infrastructure, which includes staking and validation and some other ancillary services as well. And echo what everyone said, very excited to be here and participating.
Hi everyone, Kunal, Bhasin. I'm a partner with KPMG based in Canada. I co-lead our digital asset center of excellence. So anything to do with crypto and blockchain within KPMG, me or my team gets involved in Canada, and I work with our KPMG teams globally, including the US. So happy to be here and looking forward to the discussion.
Perfect. Awesome. Thank you guys all for the introduction. So I think we're going to start with the staking OG here with Ben. I think he's the longest tenured. So Ben, how has institutional involvement in staking progressed over the past few years, and what's driving that growth?
Yeah, it's a good question, I think, to start off, just like sort of where we started and where we are today. I think, obviously, in the Ethereum world, Lido was the first early mover that got a lot of attention just to be able to start bringing assets onto Ethereum being staked, right? And I think we've come a really, really long way from that, and that's with the institutions, right? So it started with paper wallets in 2018 and 2019, and then we had staking on Ethereum, but not on the mainnet, right? And so for that long period, people were like, you know what, although I could earn rewards, I'm not going to be able to actually withdraw those assets for a long period of time. Again, most institutional investors, when they hear I can't have my assets back in perpetuity or until Ethereum makes some upgrade to be able to get them back, probably not something they're going to get comfortable with, right? So we had like the really, really high risk people on the curve that were early ETH holders, really wanted to be a part of the network, and we're like, I'm here no matter what, I'm never selling. Okay, I'll stake and earn rewards. That then changed right when we had the merge, and people started to see, okay, I can stake these assets, I can bring them back and actually have liquidity in a certain period of time, and that shifted the customer profile, right? So we started going from early holders that were sort of fanatics about the protocol to VCs, right? People that were investing in these protocols, hedge funds. And slowly but surely, we're starting to see more and more traditional institutions that are coming into the space. I know everyone's waiting for the big TradFi banks to make that happen. We'll see what happens in November with the election. I'm not sure which way is good at this point. There's a lot of word salad going around, but overall, I think we're seeing the progression in the right way. The timeline for the largest institutions, we're still not sure, but they're asking the right questions, right? And it's groups like NORS that really help provide those standards to help give the institutions comfort to be able to stake and work with the right providers.
Awesome. So, as we are seeing staking rise, Gaetan, it'd be interesting to hear how you think about the differences and needs between, institutional customers that we talk about the growth there, but also from, the retail market that, Ben talked about. It was kind of key in the early days.
Yeah, I think just also to follow up on what Ben just said, I was looking at the sort of the evolution of the staking participation, right? When you look at just numbers, when Beacon Chain was there, I think the numbers were something like 500K ETH, 500K ETH staked on the Ethereum. Fast forward 4 years later, we're about 35 million ETH, and that's like close to 200x the participation. So the market has just dramatically increased. It's hard to realize that when you're in the day-to-day looking at your CoinMarketCap or CoinGecko, you're like up and down, and it's like, but taking the full picture, participation has already immensely improved. Yes. To your question about institutions versus retail, largely that was driven by retail. Like this staking part is largely driven by individual investors who come and are interested in the project, see the value of it, and go through it. And it's logical. They don't have the due diligence and the requirement that institutions have to be able to enter that kind of market. But it very much feels like we are at this inflection point where for now a few years, institutions have started to look into Ethereum, the protocols, the custody solutions, the reportings, the requirement, what that looks like for them. And I feel like this participation is going to be driven by a few things. And obviously the regulatory landscape will be one which we can't really control besides advocating for it, explaining, educating, right, which we all do. But there's also factors around the due diligence that they go through that we are very much in control of and that I think all of us here do, which is making sure we fit the risk and compliance frameworks that these asset managers and banks and large regulated entities have. And so from that perspective, I think is the professionalizations of these institutions when it comes to blockchain is going to increase. More and more they will ask questions around private key management and custody solutions and like what is your data management processes and framework, what's your business continuity and disaster recovery framework and processes. Stuff you don't necessarily think when you are 5 people staking shop, right? But when you want to serve these institutions, you need to put these pieces in place. And I think that's what NORS is bringing us with these standards and controls, and I think that's what our institutions have been, our respective companies have been working towards. And yeah, I think that's kind of the future for Ethereum.
Yeah, and as our industry professionalizes, so do we, and our companies need to professionalize. And I think all those things are kind of key in where we're seeing that adoption. So totally agree. Zane, I think you sit at a pretty unique spot because you have both at Galaxy, looked at service providers for staking, but also you yourself now have a very successful staking business. And so I wanted to kind of get a view on like what some of the most challenges you see in the diligence process, where you guys see, what you look at, where you guys get hung up, or where you guys see friction when you're kind of selling staking.
Yeah, sure. So I think you guys already perfectly articulated some of the pain points here, so I'll be sort of recapping what those guys said. But I think in broad brushstrokes, right, so I come from a TradFi background, don't hold it against me. I was at Credit Suisse for 6 years before I joined Galaxy. Galaxy in many ways is sort of a digital asset financial firm as well. And so we're structured as such, right? We've got risk committees, we've got a chief risk officer, we've got credit, we've got compliance, AML, KYC, all these other requisite things that someone from a TradFi background are accustomed to, not so necessarily for those who are super crypto native, YOLOing into Lido, for example, right? So I think in many ways what we've brushed up against, which is part of the genesis and the value proposition of NORS, is some of the things that can't be easily discoverable on the internet if you're using beautiful providers like Rated.network and some other places. That gives you part of the full picture, but it goes way deeper than that. And I think it's ultimately boils down to granularity, rigor in the diligence process, and transparency. We talked about key management and sensitivity into how you manage PII and sensitive key material, business continuity, and disaster recovery processes. People are digging into the nuances of Ethereum-specific idiosyncratic issues, such as DVT and client diversity, understanding the relay mechanism and landscape there. And so what we're finding is that we have very rigorous requirements that are basically passed on to us from our internal stakeholders, and our counterparts in the most sophisticated houses are doing the same thing. And part of it too is education, right? Trying to make sure that what these risk committees that may not fully understand what Ethereum staking is, their requirements are properly transposed into something that can be actionable from just a diligence process. So really it's as intense and as transparent as you could possibly imagine, but ultimately that's where the puck is going anyway, right? And a big reason why we're really excited about NORS, because all of this stuff can be overwhelming and quite consuming, cumbersome, but ultimately if you're delivering these things in a unified package, then that greatly expedites the entire process.
100%. So Kunal, obviously you think about risk all day. I wanted you to help us highlight some of the key risks that are specific to e-staking. And then also, if you can, talk a little bit why existing frameworks like SOC 2 might not cover some of those risks.
For sure. So, my role at KPMG is doing a lot of due diligence. So when institutions in the TradFi world are looking at engaging with crypto in any way, shape, or form in a meaningful way, sometimes they don't even know what questions to ask, how to begin the whole process. So a lot of the work that we do is helping them understanding what the opportunities are while managing the risk. And a lot of time it actually starts with, as Zane mentioned, like from the risk committees, the questions that they need to be asking. But sometimes, like not for Galaxy because they're more involved in the digital asset ecosystem, but if you look at TradFi, they're not always up to date with everything all the unique risks that are posed by some of these digital asset ecosystems, especially in a complex technical environment like ETH staking. So when you think about slashing, what can cause slashing? What are the Ethereum requirements from the protocol itself? And how do they actually verify that the staking providers and the node operators are actually mitigating those risks and have the control framework in place? So a lot of times when we look at what are some of the traditional companies doing and how they engage with these risk committees, if you're not a crypto native, they are generally involved in engaging with a SOC 2 report or a SOC 1 report, depending on the type of product that they're offering. But what we found was, in my experience, there are now asset managers that are also launching or have launched stake Ether products. So in our experience, when we were asked to do some sort of due diligence on ETH staking providers, there were a lot of unanswered questions from a SOC 2. And that's where I think we noticed that, okay, there are some specific and unique risks, especially around slashing and how to mitigate those, how to maintain those requirements from an ETH standpoint. And those questions, when they were not being covered from a SOC 2, that's when we felt, okay, when I came across Alluvial and Liquid Collective, I felt like they were really filling in that gap about bringing about more standardization in the space, which is the need of the hour. So rather than every, organization in TradFi that is looking to get, into staking or offer their staking products and services to their customers, so that they don't have to have all of the knowledge in-house to be able to understand those unique risks. It is typical to how TradFi works as well. They may not always understand how, what all is involved in a SOC 2, what all is involved in an ISO. But as soon as they see a ISO certificate, they know that, if a company has ISO 27001, that they have an information security management system in place. Similar to that, NORS can provide that, framework for these organizations to be able to rely upon that, yes, this node operators are actually have an internal control framework in place. And I feel like that need is, and I hope that NORS is just the beginning, because we need a lot more standards in the crypto space. It's been, 14, 15 years that we've been in the space, and rather than waiting on all of the traditional associations like, the AICPA, the CPAs of the world, to come out with these standards to help institutions adopt crypto, I think it's time for the industry to step up and become more mature by drafting standards like these on their own.
Couldn't agree more. So I think we've kind of covered that, like selling to institutions very different than selling to retail or smaller customers. Myself has done a lot of staking, selling staking, and selling to the larger companies is very time consuming. So Ben, I wanted to hear your take on kind of like some of the challenges in those sales process of selling to, very institutional or security focused customers, as well as like how NORS can, actually be a benefit to you as a node operator.
I think the overall is it's like such a win-win. Most of the time when we have to deal with an institution, we're getting a 300-page RFP, right? And we get those, I don't know, once every 3 or 4 weeks. And it's either from an asset manager, from a bank, or from someone like KPMG, or a consultant, or someone like that. And you think that, like, okay, we've done this so many times, why can't we just replicate the information? But everyone has slightly different questions and slightly different formats. And every time it's like, wow, we haven't even thought about that. It's a crazy thing. And so we're getting better and better at doing these things. But having a standard that we can point to and be like, can we fill out less questions because we're in NORS? Because that would be great. And I think that's like a huge, huge win that we're going to try to say, hey, listen, we're going to create standards so it's more clear for the industry. And so we can do less work, you can do less work, and it's more transparent on what's actually there and right in front of you. So I think that's one huge one. And then you talked about rated a little bit, and these other blockchains are supposed to be like online immutable databases where it's really, really easy to compare one person to another. And that's just not the case in a lot of examples because it's not always apples to apples, right? One site may be looking at different metrics than another site is looking at, or different time horizons, or in different areas of the world, or different clients, as you were saying. And so I think this idea of creating standards and being able to actually compare service providers one to the next, like Blockdaemon, we go about head to head, right, on a lot of these staking opportunities. And a lot of times they're like, we want to work with multiple providers. It's like, okay, great. How could you compare yourselves against them? It's like, it's pretty hard, right? We don't necessarily have the information. And so if we're agreeing to standards, if we're agreeing these things, I think it's going to be easier to jointly go to these large customers and say, hey, finally we're going to have ETH ETFs in the US that have staking in 2025, 2026, who knows? But it's like, hey, I'm not even going to look at the 50 institutional providers or the 2,000 Ethereum validator providers. I'm going to look at the 4 or 5 that are in NORS and narrow it down from there. And it just will get us to the finish line a lot faster, I think.
Yeah, I think that was one of the goals here is how can we make this efficient both for doing diligence but also for the providers and their sales processes. So you mentioned ETFs. Gaetan, you talked a lot about kind of retail to institutional. Obviously NORS is focused on trying to support the largest institutions in the world. As we see now, more traditional financial institutions, obviously we've had some amazing crypto native firms, asset managers launching these products, but as you're seeing kind of the large traditional banks come into the space, do you feel like the diligence processes are going to change? How do you expect that to evolve as we kind of move to, from, let's call it more crypto natives to the largest financial institutions in the world?
Yeah, I think the short answer is they're getting more sophisticated, right? They understand better. They have resources internally who can understand better what it takes to run a blockchain, what a blockchain is, what's the ecosystem around it. And so they ask questions that are both traditional, i.e. how do you manage your data and your security processes and all of that, but also questions that are a lot more specific to how you operate on a specific blockchain. And that sophistication is really, I think, interesting and important for us as an industry because it allows them to distinguish, to your point, between the 5 or 10 people shop staking providers who say, I can do everything for you. I've got 24/7. We are 3 people, but we do 24/7. It's like, right, there's that. So you can promise anything, or you can actually deliver it sustainably, reliably as a third-party provider of a large multi-trillion-dollar asset manager should be. And I think it goes back full circle to NORS, right? The standards and control, and offering that certification gives them some form of transparency that, yep, it's been audited. There are serious companies behind it that have approved these vendors, and it gives more reliability to them. So I think this is the conjunctions of traditional firms getting more and more sophisticated into questions that they ask. To your point, the 300 pages of RFPs or 600 questionnaires or things you have to fulfill. But at the same time, us as an industry, and it's funny because I would just say during the preparation call, Ben said, if the regulators are not going to regulate us, we're going to regulate ourselves. And I thought it was very well coined. So kudos to you. And I think that's right. We're doing the work that's will be expected of us in the future, or we're already preparing now. I think that's the importance of what we do.
And I think it's already a huge signal that these counterparties are starting to understand the different intricacies of different blockchains and risks. And Kunal, maybe kudos to your team for helping on some of that, as well as having internal crypto native people at these firms that are really getting the details. So I think that's all a huge progress for us to make sure that things can continue to be done safe, but we can continue to innovate. All right, so coming to you, Zane. So a newer staking provider on the street. Obviously, you guys have had a ton of success. Your Solana validator, I think, is in the top 2 or the largest now in the ecosystem. How can you think about NORS as potentially a competitive edge?
Once again, I'm going to reiterate that these guys have covered substantially all of the things that I would like to say, but I think it boils down to 3 things in my mind, and I can be pretty pithy on this one. One is speed to market, I think is really important, especially as I'm thinking about the future of my business and outfit, to have the standard in hand to show that we've done the homework. I think puts us on a footing with the guys who've been in the game for much longer, but shows that we've got parity at least with respect to operational excellence. And to that second point, operational excellence, I think this thing, like you guys are talking about your RFP processes, and there are some things that you tease out of them and say, oh, shoot, we haven't thought about that before. That's an interesting framing of the question. Well, I take a lot of comfort in the fact that we've all done our collective research into building this standard and this framework, and it covers the great majority of a lot of these questions that were, maybe I got yous through the last cycle, but we're owning them now and anticipating them. So I think that helps me steer where, my ship and in terms of like operational excellence and trying to mitigate risks. And then I think trust is the ultimate, end game here, right? You've got something, right? You've got your ISO certification. You've got a similar concept here in that there's a lot of trust without fully understanding and abstracting away what's underneath. That should be okay because that's how it's happened through TradFi, and we would expect something to happen here. And I'm excited to show people that even if we're kind of the newer kids on the block, here I have something that means that you can trust me and deliver that level of transparency.
So I you asked about it being a competitive advantage. I see it more as becoming the foundational element rather than a competitive advantage. Like you could be competing on a lot of other things, but if you are an institutional staking provider, this is the minimum baseline that you should be following and you should be gearing towards, because a standard is nothing if it's not adopted, right? So the more firms that are adopting it, the more, standard is being talked about within these TradFis, and they know that this is what the industry, this is the baseline that the industry follows. I think that's what it needs to be rather than a competitive edge.
Yeah. And I think our hope was by getting a lot of the folks up here who are the largest staking providers in the market today onboarded first and being bought into the standard, and honestly them taking the first step of being, let's maybe even the playing field a little bit to your point. I think that just shows a lot of commitment to growing the ecosystem. And that to me is why the staking industry is going to be successful long term.
I mean, everything else in crypto has been, let's break it first and ask for game right? I mean, in Ethereum, there really hasn't been a major slashing event. There's been very few. There's been no serious correlated slashing event. But we're all fearful of it, and we're all doing things and spending money and resources to do everything we can to avoid that type of circumstance. So it's different, it's new, and I think it's a sign of maturity just for the industry as a whole. And I think we're leading by example, and NORS is definitely the ones pushing us to do that. So.
Well, I love that, and I think if we can actually get ahead of a risk for once, we're going to be in a way better position. Yes, exactly. So I think one more question before we wrap up. Kunal, you talked about this a little bit before, but obviously we think of NORS as maybe a first step of how the industry can come together. How do you bring competitors? How do you align on a standard? Do you think this is potentially a start where industry groups can kind of work together to gain more widely adopted standards like NORS?
Oh, 100%. I feel like we need some industry group to come together and build standards for the overall industry in different areas where we are seeing a lot of inconsistencies as well as challenges. Like if you think about smart contract audits, I've seen some smart contract audits which are just 3 pages. First page is the client name, second page is no vulnerabilities, and third page is the signature of someone, which is not what you're looking for when you're an institutional player. So I do feel the industry needs more of these standards, and at the end of the day, more consistency in how the industries operate. We see that and we can learn that from TradFi, where there are baseline standards and foundational elements that they comply with, and those standards are being set by their regulators. But as an industry, we've been waiting a long time for a lot of standards from our regulators at this point. But rather than getting a lot more clarity, it gets a little bit more confusing because of the difference in the regulation in, let's say, US versus Canada versus now Dubai, Singapore, which are gaining a lot more traction. So I feel like things like smart contract audits, proof of reserves is another one which a lot of regulators are saying monthly attestations, whether it be for a stablecoin issuer or it be for an exchange. But what does that attestation mean? Right, and my colleague here, Eric Ray, he's going to be up on the stage later on, and he's going to hopefully explain a lot about what it entails to become an to do an attestation versus just a review. There's a lot more rigor to it. So I feel like rather than waiting on those industry associations to come out with these standards, let's bring together some of the key players in the industry. Let's build those standards. As an industry, let's make sure we adopt those standards as well, rather than just keeping on talking about it and going to conferences and promoting it. Let's adopt those standards as the minimum baseline that is expected of all the different industries, all of the different companies in the industry.
I love it, and I couldn't agree more. I think one of the things that's been super interesting about NORS is just to see how it developed through the feedback. What it started as is not what it became, and that was really because we received such valid feedback and such important feedback from everyone up on the stage, and plus all the working group members. And so, to me, you can kind of start with a beautiful vision, but it takes the buy-in as well as like each party that does their different thing really well to kind of create something that then, if you get the right partners to buy in, hopefully can really be the floodgates to getting everyone else to adopt it.
Like as an example, I would say like for proof of reserve, like at KPMG, we built tools years ago to be able to do proof of reserves. What we've been waiting is for a standard to come out for us to be, use that standard and conduct the proof of reserve based on that standard. Again, different terminologies, you can call it different thing, monthly attestation, proof of reserve, whatever you want to call it, but at least let's have a standard in place for us to be able to do the work in a much more meaningful way and help the industry get more institutionalized.
Awesome. Well, thank you for all your time. Such great information and excited for the next panel.
Thank you.